Welcome back. You're with us on Trading Hour, and we are getting into a conversation with Mr. B. Ramesh Babu from Karur Vysya Bank. He's the Chief Executive Officer of the bank. Thanks very much for joining into this conversation. So we were just going over your numbers, Mr. Babu. Margins have done really well. You're at a multi-quarter high. I can see that deposit growth at around 14.7%, advances growth at 15.5%. So these parameters look healthy. But let's actually start by understanding if all of the asset quality pressure is out of the way or not, because our colleague Abhishek tells us that write-offs are pretty high. You were ahead of 700, northwards of 700 crores in this quarter. Will we continue to see big write-downs, big write-offs till the book is absolutely clean? Can you give us some guidance on that?
Yeah. Good morning, Surabhi. And thank you for the compliments. One thing I need to tell you, the highlight of this quarter is the highest is 1.32 ROA. So 3 years back, we were at 0.32 and now we are at 1.32. This has come mainly on account of the margins and business growth as well as the quality of the assets. Stress book management has been done very well. When you are talking about the asset quality, so a few years back, we were at more or less 9% as far as the gross NPA is concerned. Today, we are at below 3%. Net NPA also, we used to be around 4.65, something like that. We are at below 1% now. Our intention is a three-pronged approach. One is the recoveries. Main focus would be on the recoveries and to some extent write-off, and the business growth also will help. This way, we want to bring down our net NPA to below 1% so that we can put a full stop to this asset quality issue for the bank, because this used to be a big bugbear at a point of time. So once we put a full stop, we can focus exclusively on the business, and straight away the earnings will flow into the net profit. So with that intention, the SMA 30 plus also we have brought it down to below 1%. It has been continuing, and last 6 quarters, you can see the net slippages are negative. That is, our slippages are lower than the recoveries. And if you look at the slippage ratio also, which used to be 4.5%, it has come down to 0.55% for the 9 months. So that way, a reasonable control we are able to exercise on the slippages, which is actually helping us in not flowing into the stress assets.
Mr. Babu, congratulations on the return of assets. I remember your guidance was achieving an ROA of 1.2% by Q4 of FY23, and you've achieved that guidance and outdone it before that, 1.3% in Q3 itself. So congratulations. Is there a new ROA target that you have in mind? Do you think you will be able to achieve 2%? Any guidance on that? And your NPA, net NPA is already below 1%. Does it get lower, or are you comfortable with this level?
Yeah, Rima, thank you. One thing is regarding the ROA, agreed 1.2, we have mentioned exit quarter. 1.35 we can expect for this March quarter, and from then onwards we'll take it forward. Absolutely, we'll also aim for the higher numbers. So at this stage, I may not be able to give a guidance for the 24, but our intention is to go forward. On the other side, if you look at it, the asset quality numbers, when actually the problem is out, naturally what all we are earning will be going into ROA only. So that way we have an absolute clarity on the trajectory of the ROA. One more thing I need to say, the profit of this quarter as well as the 9 months profit is the highest in the history of the bank. So that way our trajectory continuously we have been moving forward. Coming to the net NPA, agreed, we were at 0.89. So the room available for us is much less. If you look at the overall net NPA, it is around 550 crores. So maybe between 0.5 to 0.89 here and there it may move. Otherwise, we need not focus much on that. The focus has to be on how to contain and sustain what we have brought up to this stage.
All right. Hi, sir. Good morning and thanks for joining us. This is Pavitra. Can you tell us a little bit, about the loan growth? Because I can see overall it looks quite good, The corporate loan book has looked good. SME has also looked good, but the retail side has underperformed a bit. So can you tell us what is happening on that front?
Yeah. It's not the underperformance. What happens actually, if you look at the main drivers of the retail book, which is home loans as well as LAP. The year-on-year home loans have grown by 17% and LAP has grown by 30%. Actually, last quarter, we didn't go for any pool purchase, which few of the pools we have purchased earlier. The repo hikes, what all have come up. So actually, many of the sellers, they are not willing to take this sort of a rate hike. That is the reason we consciously left. Simultaneously, the pool purchase, the earlier purchases, repayments are going on and no purchase is there. That's why it looks subdued. Otherwise, the organic products which traditionally what we handle, the growth is continuing that way. So overall, that's why the guidance given by us for this year is around 15. So we'll be overall crossing that 15% this year.
15% is the credit growth guidance, right?
That's what we have given in the month of June. So absolutely we'll be able to cross that. But one good thing what you can observe is earlier it used to be lopsided. One of the verticals used to grow aggressively and the rest of them used to depend on that. Now what we have changed is every vertical is growing. So that way the dependence on a particular vertical has come down drastically and all verticals progressively they have been growing. So that way we are reasonably confident between 15 and 16% annual growth will be there this year. And based on the progress what we have made, we can take a call for the next year.
Mr. Babu, we leave it at that. Thank you very much for joining in. That's Karur Vysya Bank guiding for a broad-based credit growth of 15 to 16% for FY23. ROAs improving to 1.35% in the March quarter and net NPAs staying below 1%. 0.5 to 0.9% is the broad range it will hover, but it will hover. We'll slip into a short break. On the other side, we'll get you more on the markets.